Welcome to the Real Estate Women's Podcast. Thanks for pulling up a chair to our roundtable discussion. Here, we'll teach you how you can create a stream of passive income through multifamily investing, and we'll help you to shift your mindset so you can start living the life you really want to be living by design today.
Hello, everyone. Welcome to the Real Estate Women Podcast. I'm Candy.
I'm Colleen.
I'm Tamara.
And I am Crystal. Welcome to our Passive Investing Podcast. In today's episode, we are going to talk about some of the fears you might have as a passive investor when it comes to putting your hard-earned money in a deal. You know, whether it's your first deal or your fifth deal, there's always a risk. And with risk, you always have that fear lingering kind of in the back of your mind. So we want to highlight some of the ways to ensure that you are minimizing your risk as much as possible, of course. One of the key ways we believe doing that is to make sure that the operator of your deal has the right experience to turn something that could be an issue into maybe an opportunity. So that is why we brought Charlie Peters on for this episode.
Hey guys, glad to be here. Thank you so much. I'm sorry my voice is a little raspy. I picked up a cold this past week, so hopefully everyone can understand me okay. But I sound worse than I feel, so I'm feeling pretty good.
Good.
Yes, you do. So for the past 26 years, Charlie Peters has been an owner and operator of multifamily properties and office space. Charlie has bought and sold single-family homes, small multifamily properties, larger apartment complexes, and office properties across 10 different states. For the past 18 years, Charlie has been involved in purchasing, repositioning, and reselling 14 apartment complexes and office buildings, in addition to the 11 communities that he currently oversees. Charlie is very involved in giving back to his community and loves the idea of helping investors achieve their financial goals. Charlie, we know you have some great stories to tell. So could you tell us a little bit about what was the first deal that you had that maybe scared you, or there were some fears that kind of were invoked in you, but you ended up turning it around and did okay and made out well?
Yeah, so just kind of shooting from the hip, the deal that scared me most was the first deal I ever did, just because I'd never done a deal before. So, I was 25 years old, had a broker. I'd always, growing up, I had the benefit of having parents that were older. They grew up during the Great Depression. So their childhoods, were shaped by this just kind of very difficult economic time. Mm-hmm. And so they were always really frugal, and they kind of passed that along to me. That's not always a good thing, but growing up, I came out of college, and I was the guy who had no student loan debt, always had roommates. I slept in bunk beds with my roommates when I was in college, and I had probably about $10,000 saved up. So I was engaged at the time to my wife of 26 years, and you're trying to do everything right. And so I'm talking to basically anybody I can, and tagged up with my first mentor, who was my older brother. And he said, you want to buy a house rather than rent a house. You don't want to make, don't make the landlord wealthy. You want to build wealth for yourself. And so, of course, that made sense to me. And so we went out looking for like little townhouses, and I put this little townhouse under contract, and then it fell through, and he came back and said, there's a quadruplex for sale. And if you buy this quadruplex, excuse me, my voice is cracking. If you buy this quadruplex, you can live in one of the units, and as long as you keep the other three rented out, it should pretty much cover the mortgage payment. And, you won't have any housing expense at 25 years old. And that was that was kind of a light bulb moment for me. And so we wound up buying this quadruplex in Tallahassee, Florida, off of Miccosukee Road, in between the two hospitals on the northeast side of town, which is a pretty good area.
Yeah.
And, but I just remember looking at this thing, and all I'd ever had was, up to that point, I was a lifeguard. I bagged groceries. The Piggly Wiggly. I used to throw newspapers when I was 12 years old, and I had a bunch of other little odd and end jobs. I've never really done anything, substantive. Minimum wage was $5.50 an hour back then.
Oh, wow.
and I'm signing on this loan for $126,000. And I'm sitting there looking at this going, oh my gosh, what am I doing? And, it was a scary
Right.
scary thing. And, going through the bank process and you're in there and they're asking every question you can imagine. I couldn't qualify it for my own, and my dad graciously co-signed on my very first loan for me there. So yeah, but I was absolutely freaking out when I bought that very first place. So yeah, I think it's 100% normal. If you've never done it before, if you've never been skydiving before, you're going to be freaking out the first time you do it versus the 100th time you do it. So yeah.
How was your process when you were doing that, Charlie, when you were to get your tenants? Since you were so fresh, did your brother help you out with that?
He did. My brother was also my landlord when I was in college. I lived in his rental house. Yeah, same thing. We had bunk beds set up in the one bedroom. Everybody else in the house had their own bedroom, but I had Jason Combrink was sleeping above me there for a couple of years. So he did help me out. I used his lease, his application,
Nice.
and got really, inherited good tenants. I went in and met them all before. I did a lot more honestly then than I do now. I went in and met each individual tenant, sat down and said, I'm going to be your landlord. Are you okay with that? Which is, it's just I would never do that now, but that's a funny little thing. But I remember, going and meeting them and we were close. I mean, I made friends with all the tenants, which is not always something you want to do again there, but had the good fortune of having good tenants. So yeah, it worked out well.
That's awesome that you kind of had that support. So that was a really good way for you. Like you had that fear, but you knew you had, you didn't have the experience yet, but you knew you had the experience of people you trusted around you. So I think that's a really, really big thing. If you don't have the experience, use your tribe, use your family, your friends, like ask for help, ask for experience from other people that is just, that's really huge. And that's so awesome that house hacking that's awesome. That was like my first way of getting into it. I'm like, okay, am I going to rent or am I going to live for free? But that's awesome. That's so great.
How did you start from that, Charlie? Did you from that point on, was that like just that one property gave you the aha moment that real estate was really going to be the way for you?
It did. And I cut that story short, Crystal. When I say I was freaking out, like I went to my brother and said, I don't feel comfortable doing this. This is too much. I'm not borrowing $100,000 to go buy this property with. And he said, if you ever decide you don't want the property, you let me know and I'll buy it from you for what you paid for it.
Wow.
So you don't have any risk. So that was a stand-up thing for him to do. It was a big deal. And frankly, he saw the value in it that I couldn't see just because I didn't have that experience. So, but yeah, there was, when I say I was freaking out, there's a little more to it. Too, so.
That is definitely big.
Yeah.
So
Do you still own the property, Charlie?
No, I sold it. We sold it and did a 1031 exchange into the office building that I'm in right now. So I did sold that in 2013. So I kept it for a while, 1996 through 2013.
Wow.
Nice.
Right.
So Charlie, going back to you saying that you wouldn't be like part of the tenant screening process in your current situation, kind of going on that, is there any particular things you would stay away from, any things associated with any deals that you could share with our listeners to guide them?
Anything you'd stay away from?
Correct.
I mean, there's all kinds. Yeah, there's a lot of things you want to stay away from.
Right.
Yeah,
So pick it, throw a dart and pick one.
Yeah, I mean, I just run through bad areas, high crime areas.
Okay.
Be careful of areas that are not growing. I do not like areas unless you can just Google small town Pennsylvania and population, and it'll show you the population trajectory of any city or town in America. And so the ones that are going down, you just want to be careful of that. And if they're going down and they're in a bad area, numbers always look great. Those are always the ones where the rent multiples are always, the price relative to where the rent is always sounds really good, but just, you want to stay away from that stuff. So those are the main ones that come to mind. I would, you guys touched on it earlier, but I would be very careful to make sure that if you're partnering up with somebody, you have an experienced operator, somebody who's got a track record, who's been in the game for a little while, who's done some deals, who just that you have that confidence that you know what they're doing, and more importantly, that they know what they're doing. So, yeah.
That's a really good one. I definitely think market is definitely, because all the property can be great and it can be perfect. Everything else can be great, but if it's not in that right area, there's definitely some trouble to be had. So that's great advice. And when it comes to things for like a passive investor, did your family and kind of help you out? Do they invest passively? Do you personally invest passively? And if you do, what are some things that you would say, some advice that you would give somebody other than, of course, like pay attention to the market, because there are a lot of people that want to invest passively, but they have that fear. They just don't know. They don't have the experience. So what's the first thing that you would say to someone who's just straight up afraid to lose that like precious nest egg of theirs that they've been saving?
Yeah, more in my mind, and you guys may totally disagree with this, and this is the benefit of a panel, is you can have a lot of different opinions, but I would, more important than the deal, and any halfway decent deal, you're going to get this very nice presentation on why you should buy the deal, and what the deal looks like in the deal, and what the deal is going to do. And more importantly than the deal is who is the sponsor.
Yep.
I just think that carries so much weight. And so I have done some passive investments with some other people. You guys would know the names, but yeah, I have done some passive investments there, and it's just I developed a relationship, felt very comfortable with them and their ability to execute on the business plan. So.
I'm sure at this point you probably invest in a lot of your own deals, of course, knowing that you are operating it, so you have that investment as well, the little extra skin in the game. So that's awesome.
Mm-hmm.
So you built up a relationship with the people that you did the passive investing with prior to just looking at the deal itself, and did a little deep dive homework, what you're saying, with the sponsors by just knowing them.
I have never received an email from someone and opened it up, and if I didn't know the sponsor, literally it doesn't matter. It doesn't, for me, and this point you may disagree with, it doesn't matter what the deal is.
Yeah.
I'm not investing in it if I don't know you.
Yeah.
So there's go watch a couple of episodes of American Greed, and you'll see kind of how that works out. But,
I definitely agree.
I just don't. A lot of people do, and probably you'll be okay, but I don't.
Right.
What can investors expect in communication back and forth? Obviously, I agree. You really want to know your investor to be able to the sponsor. You want to be able to get on the phone and say, "Hey, I haven't heard anything," or "Did I get this email?" Do you find that the people that you've chosen that you're investing in, that you have that communication, and you feel like you can just pick up the phone or shoot them an email and get a quick response?
I do. Most of my investors are still, I consider friends and family. So I know them. I mean, I know them. So they're welcome to call me anytime, obviously. We do monthly updates, so people kind of know, where things stand. If they want to, I don't know how many people actually read those emails, but if you go through and read them, they'll know kind of where things are.
I'm that person that reads them all. I read all the fine print. I read everything. I'm always excited to get the email and be like, okay, well, that's doing good. Okay, to know which properties have turned. Like I love that. I love the feeling of being informed because I know like that's that I work hard for the money that I put in. So it's for me. I thoroughly enjoy getting those emails personally.
Right.
Yeah.
Right. Do you have and real estate, any kind of investment is risky. Real estate, it seems like it feels like it's a less risk asset, but there's risk involved. Do you have properties and experiences that you've had with properties where everything is going well, and then there's just some kind of turn, whether it would be suddenly you found in the due diligence something wasn't really found in the due diligence once you've closed on the property, and you're having to do extra work and it might be affecting the investor's money, or you were able to turn that property around and actually get more for your investors, that was like a wonderful bonus surprise.
Yeah, you're covering a lot of ground there.
The good,
So
the bad,
let
and the ugly
me
come to mind.
let me. I'm not sure if you asked this question, but what I
So tell me what came to mind.
what I heard is give me an example of something where things did not go well, basically.
Yeah.
Yeah, we've got, we do a couple of different things. We do multifamily, value add investing, which is probably my bread and butter. I still flip houses. I've got a house flipping business, so we'll flip probably 12 houses this year. We're in the office market, so I do office properties as well. And then we do land development. And multifamily value add properties should be very boringly predictable. Okay? And which is good, because you have that, there should be a high degree of certainty over what's going to happen, unless you have some 9/11 moment or something like that.
Right.
That's kind of a fluke. But on our land development stuff, that's all over the place. So you just don't know what's gonna happen. So yeah, we were working on a land development parcel in Central Florida, just south of Orlando.
Is this the
Met with the
Narcoossee Road
county.
one?
It's on Narcoossee Road.
Yeah.
Yeah. Met with the county, and everything's good. They liked our site plan, and I mean, this was nice. It's a Class A, brand new development, gorgeous. And then we go in, and we had a couple of community meetings, and we critiqued some stuff, changed some stuff up based on input from the community. The last step there is to go in for final approval through the city commission, and that's an open meeting. And all these people show up with all these signatures saying, we don't want this new development, and we don't want apartments in our community. And they were getting ready to vote it down. And this was it's called a PUD, which is a planned unit development with the state of Florida, which requires approval from the state of Florida. And if your PUD gets voted down at this meeting, there's a 2-year wait limit. I'm sorry, there's a 2-year wait.
Right.
You got to wait 2 years before you can resubmit it.
Wow.
So we wound up pulling our application and didn't apply like at the meeting. But man, these people were like, it's funny. They show up and they are upset, and they don't have any interest at all. They don't own anything, but they're whatever, people who live there, and they got votes is what they've got. And so we pulled that thing. I've still got it. It was under contract to be sold 2 years ago. I've still got it. And we're sitting on it, and it stinks. But we're trying to unload it. We just got a new letter of intent, and I think we're about to sign a new contract for it. So I'm hopeful that'll work out. But that was we should have been out of this thing a long time ago. So that one is not going well. So.
That's funny, because like that's such a sought after area. I actually was like this close to moving to a development out there that is being built right on Narcoossee Road. It's all like really outdoorsy, and like that's such an amazing area. So I'm sure that will definitely turn around for you. But it definitely seems like in your experience and opinion, working in all these different asset classes, if you had to kind of advise somebody who said, okay, you work in all these asset classes, what is kind of the least risky of them all? And I'm assuming, since you said that value add multifamily is being your bread and butter and kind of the boring one, is that kind of your opinion on it, or with your experience?
100%. Yes, absolutely.
Nice.
Yeah.
That's good to know.
Yes,
I know that's always a question. Like, there's real estate and there's passive investing, but there's so many ways. There's storage units. There's just so many asset classes, and it's tough for people to break it down. So that's definitely a good step one.
Yeah. We right now, there's always just this ancillary stuff going on in the economy. You don't have any control over. Interest rates are going up right now. We just came out of COVID, and office properties in Tallahassee are not doing well. There's a high vacancy rate right now. And so when we have when one of our office spaces comes up, it's not uncommon. It'll sit. It's harder to find a tenant for a 3,000 square foot office space than it is for, a 2-bedroom apartment. There's a million people out there looking for a 2-bedroom apartment, but there's a smaller amount that are looking for that office.
Yeah.
So,
Do you think that office space is going to rebound at some time, or you think that it's going to have to be changed to something else?
It will. There's a push. Every city, every city. I would say most cities, there's probably a push to repurpose a lot of that office property, especially if you have higher vacancy rates like we do in Tallahassee. And so they'll turn it into something else, and then eventually it'll balance out. There's a bottom there somewhere, but yeah, the work from home phenomenon was kind of already actually underway before COVID.
Yeah,
and COVID just hit the gas on that. So and that's still the full effects of that are still to be seen. So we'll see how it all shakes out. But I mean, eventually, office will be desirable again at some point. So.
If someone were coming in, Charlie, to passive investing for the first time, in the real estate realm, would you suggest that they kind of narrow in on that niche, like the value add, go to something that's a little bit more on the side, mobile home parks, or whatever it is, to choose one niche and learn about it, or just talk to everyone around you that's getting involved to kind of get a feel for like where they are? Like, how would you suggest somebody coming in brand new, like where to choose to go?
Yeah. So if I'm a brand new investor, again, the whole big pitch, the big sale on real estate investing is it should be really predictable. I mean, you got a unit right here that's, 2-bedroom, 1 bath and 900 square feet. And then right up the street, there's another unit that's 2-bedroom, 1 bath, 900 square feet, and it's renting for $1,000 a month. And the one you're looking at on average is $600 a month. Mm-hmm. That's really all you look for. It's not a real hard thing. So, you should be renting these for around $1,000. There's no reason these couldn't rent for $1,000 a month as well. And so, you make some cosmetic improvements and you put people in there. And that is, again, it is boringly predictable what should happen versus a piece of land or an office building or an industrial site, or certainly, stock in Walmart. I have no idea what Walmart's quarter is going to look next year. So if you're an investor, I would say unless you want to take a gamble, and you can earn some higher returns with like with the land development, you can earn some higher returns, but you got to be okay accepting a much higher downside risk, just because it's just there.
There's so many different variables.
So yeah, I would
right.
100%. I would steer people towards value add multifamily investing, not brand new, beautiful Class A properties. But you want, Class C. And when I say Class C, just kind of tired, built in the 1980s, workforce housing, ideally that hadn't been updated, that's in a good area. And I think it's hard to screw that up. So that's in terms of safety. And if you're a new investor, that's the best asset class.
Nice. And I know definitely safety is a big concern on everybody's mind, because with, just what interest rates are doing right now, a lot of people that are excited about investing in real estate, with people are not even buying houses right now. Things are starting to sit, especially in comparison to what it was. So do you think that, the possibility of something like, some kind of, no, I wouldn't say straight up depression, but something to that effect. What do you think that will do for something even as stable as multifamily? Do you think that that's going to increase because, people are going to be buying less homes, renting more? Or do you think that it's going to change the game a little bit for multifamily?
I do think it's going to change the game a little bit for multifamily. Yeah. And the higher, there's a cost of capital that's darn near almost been ignored for the last 10 years, maybe, just because interest rates have been so low from a historical standpoint. So we're just getting back to where interest rates have kind of historically been. But I heard yesterday on CNBC that interest rates on mortgages for residential loans are at a 22-year high right now. So, so it's pretty. I mean, it's a big shift that we're going through here right now. So, I do think as long as inflation is out there, kind of roaring, you're going to continue to see rents climb higher as well. So I'm not super worried about it from a cash flow standpoint, but ultimately, apartment complex is valued on some multiple of whatever the net income is, whatever the profit is for that apartment complex.
Yeah.
And so if interest rates are higher, that's going to bring the value down.
I think what you said right there was key, the fact that rents keep pace with inflation, because with this inflation climbing, capital is a little bit more expensive, a little bit harder, you pay a little bit more to get that loan. But with the rents going up as much as they are with inflation, that really does level things out. So I think that's something that kind of a lot of people that are looking into it and have that fear. I think that's one thing they could do is do their research on inflation. What do rents do with inflation? And yeah, I think that's definitely something can help. Thanks for touching on that. That's really a big thing to look for.
Yeah, 100%. And I can tell you, I do some, I invest in the stock market as well. I have gotten crushed this year. But again, if you buy stock in Walmart, there is absolutely nothing you can do to make the value of that stock go up. And if you buy a broken down old apartment complex, there's literally 1,000 things you can do to increase the value of it. So there's so much more control there that you have versus buying stocks or hedge funds or mutual funds or whatever there. So yeah, that's one of the other things I like about real estate.
Even with single family, that was the one thing that I was in awe of when I started getting to multifamily, the being able to force the value. Like at first I didn't understand that because just with single family, it's based upon relatively what the houses are selling around you. And also you can put a lot of money into your own house, but if the houses around you aren't selling, you just kind of put more money into a house that really isn't going to sell for all the money that you put in it. And that's one thing I see over and over again when I was doing more of the single family purchasing from direct to seller. That people didn't understand that. It was beautiful to learn that in multifamily that you can force that value. And obviously within reason, based upon what you described before with the area surrounding what the rents are. One thing I wanted to touch on about those rents, because I know that you can make a property look really good on numbers, but you also, like you were talking about the demographics. With inflation going up, obviously you were saying the rents go up, but then at a certain point, people's wages don't go up as the same rate as inflation. So how do you, when you're looking at a property and you're looking to evaluate it, how do you take that in consideration in the area? Do you look at the actual businesses and like their history or like payment? Like, how do you work with that and thinking about how far can we bump these rents without actually having people leave the town or leave your apartment building?
Yeah. I mean, if this gets bad enough, it could be bad, for real estate. I went through the Great Recession. We owned apartment communities in 2008 when everything blew up, and there was an interesting little phenomenon that happened where you could take a healthy house. Tallahassee is the state capital of the fastest growing state in the USA, and that's where I live. So it's a very healthy market. And in a very healthy market, you probably get about 95% occupancy. I talk with my hands a lot. Sorry about that, but it's anyway. You got a nice high occupancy rate, so 95% occupancy is a healthy market. And there was an interesting thing that happened, which is the number of people per household increased from about 2.2 to 2.4 in Tallahassee, right? And that doesn't sound like a big deal. Yeah, 2.2 to 2.4. Okay, what's next? But you think about that for a second. 2.2 to 2.4, that's a 10% swing. So if you got a 95% occupancy rate and the people per household goes from 2.2 to 2.4, you're dropping by 10%. So now you're going from 95% to 85%. And so the occupancy rate in Tallahassee or the vacancy rate shot up big time during the recession there. And it was hard. It was a lot harder to rent apartments. And we're doing, 1 month free, specials. And again, this is a very stable local economy. But it was tough, and it'll be more challenging. You want to get to your point, though, Candy. If you can get closer to recession-proof industries, state governments are great. So you can mine the state capital of a town. Hospitals, typically don't lay off workers. They're almost always needing nurses, and so they're not laying off people. So anything that's universities, same kind of thing. People actually enrollment increases during recessions because people go back to school. They can't. They lose their job. They decide to go back to school and level up on their education. So there are things you can do to kind of be more sensitive to that. I would say tourism related, markets may be a little more shaky than some other markets here. So yeah. Those are all things to consider. A lot of stuff to take in.
That's another great piece of advice. Really pay attention, not just the market, but what's the jobs around there. So when you're looking to invest, pay close attention to that, especially moving forward with what we have, what could be coming up. So that makes sense. And it's funny. I never really, you always see when you're kind of doing some back end work, looking at deals, and you see those little rates. And I've never given enough weight to the 2.2 to the 2.4, but when you put it that way, that is 10%. That's a big difference because, people in that time needed that extra person's income to pay the bills, to pay the rent. So people were moving in together. And I definitely never gave that enough weight, those little numbers. So thanks for touching on that.
Yeah, that's a big deal, definitely. Or it was back then. Yeah, definitely.
Yeah.
What I keep hearing from you is that the importance of learning to pivot, to keep analysis on your property and just keep things going, you saying giving the 1 month rent or just to keep the property flowing and going. So that was a really good
Yeah, 100%. Yeah, you better be. What we talk about is we have a plan A. Every property we buy, we have a plan A, and that's the business plan for that property. And then there's always a plan B and a plan C and a plan D. And there's usually 3 or 4. And again, the higher risk the deal, the more important it is to kind of have those reinforcement plans in place to make sure that if things don't go well, you got a backup plan in place, because you don't want to get caught with your pants down with when plan A falls apart. So yeah, very important to do that. 100%.
Well, I think that's why we love real estate. It's because, like you said, you can't control Walmart, but an asset, you have so many plans and so many different ways that you can go with something and still have it be a good investment.
Definitely so. Yeah. And there's a lot of things you can do. 100%.
Control is definitely key. If you can have some control over it, that definitely mitigates the risk. And that's one of the things I think I took most about. I love Robert Kiyosaki and his book, Rich Dad, Poor Dad. I absolutely love it. And that's one thing he really talks a lot about, is being able to have the control over your investment is just huge. So that's definitely something awesome. And if you aren't ready to buy that huge multifamily yourself, make sure you truly trust the person who has the control. So I think that all just loops right back around to knowing the person and that's running this deal, the sponsor, having that faith and trust in them, because that's where the control lies. So that's big.
Well said. Yes, ma'am. Definitely so.
Awesome.
How many people on your team do you usually have on a property that you create these business plans?
It varies on the property. So yeah, if small property is usually just me. If it's and then going up, it'll be me and one other person, and then as it gets bigger and bigger into larger properties. I'm trying to think. Our last deal we closed on, we had 5 GPs.
Nice.
GPs is general partners, where each person is actively managing. Limited partners put cash in. General partners are responsible for execution. So we have
Thank you for clarifying that. Awesome. Well, this has been great. You gave us so much awesome stuff, a lot of great things. So we really appreciate all of your experience and your advice, and your stories are great.
Yeah, no, this was fun. I feel like I'm on an episode of The View. You guys are awesome.
Well,
Thank you
there's
for
no
coming on with
copycats
us.
per se, but yes, it's the roundtable discussion that we love to have around the industry we love. It's multifamily investing. So Charlie, if our listeners would like to learn more about you, where can they reach you?
Yeah, so my website is my brand is Alliance Capital Partners. Website is alliancecapitalpartners.net. You can find us on Facebook, and my website are probably the two best ways to reach out. But just click on the Contact Us tab, and we'd love to connect with anyone out there who'd be interested in connecting.
Awesome. Well, we really appreciate you being here, and we like to end each podcast with a thought-provoking quote of the day, and I have 3 cards here, so you get to pick one through 3.
Ooh,
What's your
2.
name? Yeah.
Go with 2.
Number 2. Okay. So number 2 is being aware of your fear is smart, but overcoming it is a mark of a successful person, by Seth Gordon.
Wow,
So
very
what
good,
bubble-
very good.
What bubbles up? What bubbles up for you, Charlie?
What bubbles up for me when I hear that quote?
Yeah.
Can you read it one more time?
So being aware of your fear is smart, like being aware of it, but overcoming it is like is even more of a mark of a successful person.
Yeah. There's I'll what bubbles up is another quote that basically says the same thing, which is that you guys know Rod Cleef, but he has a thing that he puts up that says the enemy of success is a comfort zone. And so you don't want to be dumb, right? You don't want to step out the road in front of a semi because you're trying to overcome your fear. But at the same time, you can't.
Good analogy.
Yeah, you don't want to be dumb, but you can't let fear paralyze you. And so, as that relates to multifamily investing, there are so many just great people in this industry who have these long track records of doing amazing things. And I've never had an investor lose money in 26 years, and so I'll be darned if that's going to happen anytime. And things don't always go. We may be on the precipice of a great recession that may be happening right now. And but I will go down swinging. If it does. And so I would like to think that I'm a good bet. And there are lots of good guys and young ladies out there that I would have full confidence in. And again, much more so than the stinking stock market. So that's that's where I see kind of the main competition with real estate. I have guys from Merrill Lynch that are financial planners that are my LPs. So where do they put their money? That's just funny. So
Yeah.
Anyway, a little off track there, but yeah, don't let fear hold you back is the main takeaway there.
I think that's a great take on it for sure. Sorry, Candy, go ahead.
When I think about fear, I mean, obviously, fear, we naturally feel it because it is healthy. You step in front of a semi, you see it coming, fear kicks in. Hopefully, you jump out of the way. Or you choose not to put yourself in that position. But fear is also, it can be a really good indicator. And when we are connecting with our fear, we know where it's coming from. Is this something that's life-threatening, or is this something new and I don't know the outcome? So I love the advice that you gave about going with something, that you feel comfortable with. And you touched on earlier about the higher the returns in real estate usually tends to be the higher the risk. So rather than going with something with a higher risk that's going to create that fear and discomfort of anxiety, as an example, go with something that is a bit more secure, like you were saying, or it's like the boring aspect of the value add of multifamily. And then as you get your feet in the water and understand that feeling of the fear around moving to the next investment, then you can just go gradually. You don't have to just jump into the deep end and not know how to swim.
Right.
Well said. I probably shouldn't have said boring. Predictable is the word I was looking for.
No, it's good.
But, yeah.
It's
Boring sometimes is good, particularly when it comes to investments. I mean, slow and steady wins the race.
Yeah.
You know?
Yeah, 100%, yeah.
And I think that definitely speaks to how often you do it. You know what I mean? It's so second nature to you that multifamily value add is just, for you, it probably became boring because you've gotten so good at it, and you can pivot, and it doesn't feel like a big hassle. It doesn't feel like a big change because you're like, okay, I've seen this 3 times. No big deal. Let's do this. I have plan ABC ready to go. So I don't think it's bad that you said boring. I just think it speaks to the experience that you have. For some, predictable might be a way to hear it, but I enjoyed boring.
Yeah.
For sure.
Oh.
Well, I'm a boring. That word bubbles up to me is that if you have a fear surrounding investing, it's better to be boring than to be the flash and the frill, and that where you feel like you're being scammed or sold a bill of goods that isn't true. So it really does circumference the fact that you shouldn't be fearful, especially when you have an underlying asset and people need a place to live. So.
Yeah. No, I agree. And definitely, I think more people have fear as that beginner's thing, especially even like you said, Charlie, buying your first fourplex was very fearful because you'd never done it before. But I think, getting in and learning about it and having a good mentor or friend or family in your case kind of helped you to overcome that fear. And I mean, look at you now. You went from a fourplex to, well, you own quite a few things. So you've definitely climbed that ladder and overcome your fears.
Yeah, no, definitely so. Yeah.
And I think that the quote too also really marks the difference between a successful person and an unsuccessful person, because a successful person has a fear. They're not just going to accept that fear as a limitation. They're going to take it. They're going to look at it. They're going to dig deeper into it. Why am I afraid of this? What can I do to become less afraid? How can I make this less scary for me? So I think that's definitely a big thing that a person that is totally driven to succeed will do. They just won't be like, I'm scared. It's my limitation. You know what I mean? So I think that was a great quote. And, unfortunately, we are running out of time. And Charlie, we really, really enjoyed chatting with you. Your stories were awesome. We really appreciated your experience and all of that stuff, just the different ways to pivot, the priorities of having that A, B, and C plan, the different ways to turn a deal around, some of the safer options, even within real estate on a whole. So your insight was really awesome. So we really appreciate that very much.
Yeah. This was great, guys. Thanks again for having me. And maybe we'll do it again sometime. Definitely.
Yeah. So there, that's good. That's totally an open invitation for another email. Well, thank you so much. We also just want to say thanks to you guys, our listeners out there. Thanks for joining us at our roundtable today. Please tune into our next episode to get some more great info for some of our amazing guests on different things that it's really good to know when you are looking to invest passively. Remember, you can always check us, the Real Estate Women, out on Instagram, Facebook, watch our episodes on YouTube, or of course, visit our website at therealestatewoman.com. So thank you guys. Thanks again, Charlie. Ladies, this has been awesome. And thanks so much, listeners.
Thank you.
Bye.
Thanks, everyone.
Thanks, guys. Bye-bye.
Bye.
The information contained in this podcast is for educational purposes only. We are not licensed professionals and do not give investment advice, tax advice, or other professional advice. Please consult a licensed professional before making any financial decisions.